Welcome back to the Daily Crypto Deep Dive. Today we're doing a proper soup-to-nuts breakdown on SUI. What it is, why it exists, who built it, what makes it different from other Layer 1s, how the token launched, what the early buyers paid, what happened to the price since day one, and the honest question everyone really wants answered. Is this a serious long-term contender, or just another fast chain in a crowded market? SUI is a Layer 1 blockchain built to do two things extremely well: scale and feel fast to normal users. Not fast on paper, not fast if the network is empty, but designed from the ground up so that everyday actions, sending assets, trading, minting, gaming interactions, can confirm quickly, cheaply, and at scale. And the reason people paid attention to SUI early is because it wasn't built by random anon developers. It came out of the same talent pool that built Meta's old blockchain experiments. The team behind SUI is one of the main reasons the project was taken seriously from day one. It was built by Mysten Labs, a company founded by former senior engineers and researchers from Meta, who previously worked on the Diem blockchain and Novi wallet project before Meta shut that initiative down. Key figures include Evan Cheng, who was a director of engineering at Meta and had previously worked at Apple; Sam Blackshear, one of the original designers of the Move programming language; Adeniyi Abiodun, who led product efforts within Meta's blockchain division; and George Danizis, a well-known cryptography researcher. When Meta abandoned Diem due to regulatory pressure, this team didn't abandon the technology or the ideas behind it. Instead, they took the core lessons learned from trying to build a blockchain capable of serving billions of users and decided to build something independent, open, and purpose-built for Web3. Their thinking was simple, but ambitious. If you are going to onboard mainstream users, you cannot rely on slow confirmation times, fragile smart contracts, or networks that stall under pressure. They believed existing blockchains either sacrificed scalability for decentralization or sacrificed resilience for speed. So SUI was designed from scratch, with an object-based architecture, parallel execution, and asset-native programming rules through Move, not as an incremental upgrade to an existing chain, but as a reimagined infrastructure layer meant to support high-frequency applications like gaming, trading, and consumer platforms at internet scale. The founding team's background in large-scale distributed systems, security research, and product engineering heavily influenced SUI's design philosophy. Prioritize performance, reduce bottlenecks, and make the user experience feel closer to Web 2 applications while maintaining on-chain integrity. In short, SUI wasn't created as a meme coin or speculative experiment. It was built by a group of engineers who had already attempted to design a global-scale blockchain inside one of the largest technology companies in the world, and who wanted to prove they could execute that vision without corporate constraints. Now let's get something straight right away. SUI is often compared to Solana and sometimes compared to Aptos because it sits in that category of newer, high-performance Layer 1 smart contract platforms. But SUI's identity isn't just "we're fast." SUI's pitch is that it's fast because of how it models assets and transactions internally, and that's where the story gets interesting. Most blockchains treat the world like one giant shared notebook. Everyone writes in it, everyone checks it, and because it's shared, you end up with bottlenecks. SUI takes a different approach by being object-centric. Instead of the whole chain being one big spreadsheet where every transaction touches the same global state, SUI treats assets as objects. Many transactions only touch specific objects that have a clear owner. When ownership is clear and transactions don't clash, SUI can process them in parallel instead of queuing everything in a single line. That parallel execution concept is central to what SUI is. In simple terms, SUI is trying to turn a single-lane road into a multi-lane highway. To make that work, SUI uses the Move programming language, originally created during the Diem project, but adapted into what's often called SUI Move. Move was designed specifically for digital assets, stricter rules about what assets are and how they can be moved, copied, or destroyed. That reduces certain types of smart contract risks compared to older designs. But speed isn't only about programming language. It's also about consensus. You'll hear SUI associated with Narwhal and Bullshark, a two-layer approach that separates data availability and ordering while still reaching fast finality. You don't need to memorize the names. The takeaway is this: SUI was architected like a serious engineering system. Split responsibilities, remove bottlenecks, don't force every transaction through the same heavy consensus path if it doesn't need to. Now, zoom out. Why did SUI start? Because the industry hit a scaling wall. Ethereum became the dominant settlement layer but struggled with congestion and fees during peak periods. Layer 2s helped, but added complexity. Fast Layer 1s emerged, but some suffered outages or criticism around centralization. SUI's bet is simple. Build a chain that scales horizontally, stays stable, and feels smooth to use, using an asset model that reflects how people actually interact on-chain. Trading assets, moving assets, owning assets. SUI isn't trying to win ideological purity contests, it's trying to win consumer adoption. The ecosystem narrative has always been about smoother onboarding and reducing Web3 friction. Now let's talk about the token, because that's what most investors really care about. SUI mainnet launched publicly on May 3, 2023. The token is SUI, and the maximum supply is capped at 10 billion tokens, but only a small percentage was circulating at launch, roughly around 5%, with the rest subject to vesting schedules and unlocks over time. That's crucial, because circulating supply and fully diluted valuation can look very different. If you only look at market cap without understanding unlocks, you miss the bigger picture. Was it an airdrop? Not in the traditional free tokens for everyone sense. Instead, SUI launched with a community access program that allowed early participants to purchase tokens and rewarded ecosystem contributors. So rather than a pure airdrop, it was structured access combined with community allocation. Early reported prices often reference two levels, roughly 3 cents for certain allocations and around 10 cents for broader public sale access. When trading opened on exchanges, the token initially traded around the $2 range, dramatically higher than those early prices. That's why early participants saw immediate paper gains once market trading began. Now, distribution. Roughly 50% of the supply was allocated to a community reserve managed by the SUI Foundation. 20% went to early contributors, 14% to venture investors, 10% to Mysten Labs treasury, 6% to community access participants and testers. That structure tells you two things. First, there's a large pool for ecosystem growth incentives. Second, unlock schedules matter. Contributor and investor unlocks can create supply pressure, particularly in weak markets. Let's move to price history. SUI's all-time high sits around $5.35, reached in early January 2025. Its all-time low was roughly 36 cents in October 2023. That means from launch excitement to bear market low, SUI dropped heavily, like most high-beta Layer 1 tokens. Then it recovered significantly during the next major risk-on wave. This is not a slow, stable asset. It trades like a volatile growth technology play. When liquidity floods in, it moves aggressively. When liquidity dries up, it can fall hard. So what is SUI actually good at? Where it has real potential is in high-frequency on-chain environments, gaming, NFT ecosystems, trading platforms, consumer applications where latency matters. If you're building something that needs to feel instant, SUI's architecture is attractive. But here's the competitive reality. Ethereum dominates security and settlement. Solana dominates fast-chain retail narrative. Aptos shares similar move language architecture. The Layer 1 space is crowded. So SUI doesn't just need to be fast. It needs sticky applications. It needs liquidity that stays. It needs developers who choose it because users are there, not just because the tech looks good on paper. Here's my honest take. Technically, SUI is credible. The team pedigree is strong. The architecture is well thought through. It is not vaporware. But long-term success will not be decided by technical diagrams. It will be decided by total value locked, active wallets, developer retention, token unlock management, and whether real consumer applications choose SUI as their base layer. If it captures meaningful gaming or trading infrastructure adoption, upside could be significant. If it fails to differentiate beyond another fast Layer 1, it risks blending into the mid-tier. SUI is not Bitcoin. It is not Ethereum in terms of entrenched dominance, but it is also not a joke project. It sits firmly in the high-risk, high-reward Layer 1 category. If you're holding it, the questions to monitor are simple. Are developers building? Is liquidity growing? Are unlocks manageable? Are users staying? That's what will determine whether SUI becomes long-term infrastructure, or just another cycle token. Thanks for listening as always. Drop your thoughts in the comments, smash like, follow the show, and we will see you at the top.